Logs anyway. The mortgage reports.
All right, I think we're live.
We are live. Tilson live. I'm trying to find one more little article here.
All right.
New home construction loans work. Okay, we've got that up. We are Tilson live. Thank you everyone for joining us on Tilson Live. Have I said Tilson Live enough yet where we can get the message that this is Tilson Live?
I think so.
Okay, Dawn has dubbed it Tilson Live. So as long as we call it Tilson Live, we have to be live. And so we are live. We are on Facebook
Absolutely.
page. We're on YouTube. We are live around the World Wide Web, as they say, as the kids say. We think this internet thing is going to stick. We're pretty sure that this is it's going to be a thing. Hello, Joseph. Welcome. We're glad you're here, joining us over on our YouTube channel. We're grateful for that. Dawn, do they have to have a Facebook account or YouTube account to do this?
No, they don't. That was actually a change to Facebook a few months back. They are allowing people to join Facebook Lives without having an account. And if they come, you'll see them kind of come up as an anonymous poster. But you can also watch from YouTube without an account. So you do not have to have an account.
Well, there you go, folks. You do not have to have a Facebook or YouTube account. So everyone who is confirmed on the conspiracy theories and does not want to have a Facebook, YouTube account, you can still watch through Facebook without having an account. So we'd love to have you on. We got folks from Katy, Texas. That's great. I see someone from Fort Knox, Kentucky.
Fort Knox.
You must tell us, Monica, is there really gold at Fort Knox? We want to know. Please go find out for us. Our national security depends on it. We need to know how much liquidity we actually have. In the spirit of liquidity, Dawn, what in the world are we going to talk about today?
We are going to talk about financing your new home when it's under construction.
All right. Well, I was all geared up for foundations, but we'll talk about financing instead.
You did that this morning.
Oh, sorry to say no, sir. Oh. Well, that's devastating news. Sorry, guys. No gold bullion at Fort.
Oh.
Run for the hills. All right, Fort Worth, Tampa, Florida. All right, everybody, y'all jump in here and join. Obviously,
Facebook joined us. Yay. Baytown.
All right, welcome Facebook. Facebook is here. YouTube is faster than Facebook, let it be known, today. So I'm Eric Aller with Tilson Homes. We're so grateful that you're joining us live today, joined as I am every single Tilson Live by the greatest executive producer, senior executive producer of the Tilson Live show is Dawn Dantzler, Director of Marketing. Say
hey, everybody.
So Dawn,
and we're trying out a new platform this time, so let us know what it looks like compared to what you think versus the other one.
We are trying a new platform, so yeah, please let us know. Hello from the north side of Houston. Well, you just south of me if you're on the north side of Houston. Nixon took care of the gold standard years ago. Okay. All right. Well, we were getting quite the history lesson today. We got Weimar, Texas rolling in here. Good old Colorado County, just west of Katy. So, folks, we are going to talk about one of the most pressing subjects about building a custom home on your land, and that is how in the world do you pay for the thing? How do you pay for it? How does the builder get paid? Who's responsible for making sure that the job's getting done, that you can release those funds to the builder? It can be a really scary thing. It's a lot of money, right, Dawn? Like it's
absolutely.
For most people, this is the largest purchase that you'll ever make. I mean, you're $300,000, and on average most times. So, anyway, history. I'm just old. I got news for you, Joseph. That's what history means. And hey, don't complain about getting old. A lot of people don't get the chance. So,
okay, my daughter the other day told me that for her history project, something had to be 10 years old to be history, and I think I aged like 40 years that day.
10 years old to be history.
Yeah, 10 years old and it's history.
My fifth grader is now history. All right, so we are going to talk about all things financing, all things construction loans, all things permanent mortgages. Rates are still unbelievably low. So at the time of this live, we're November 12th, 2020. For folks who go back and watch it later, the 30-year fixed rate is ridiculous. It's hovering right around at 3%. So former Tilson close. Oh, just Jessica. You close for us. So yeah, welcome. Thanks for joining us, Jessica. So yeah, she speaks the truth. We try to make this as easy as possible. We've been building on people's land, obviously, for nearly 100 years. We're fourth generation family owned and operated. And we're going to get into a little bit of why we kind of do this way, what it looks like. So we have Dawn, I say we, I've done nothing. Dawn has prepared a presentation for us. I want to go through some of those slides for you guys just so we can kind of set the tone, because as you're going around shopping or talking about building a custom home, the very first thing you're going to hear from anybody outside of the Tilson organization is going to be, all right, well, you got to go get a construction loan. So Dawn, what in the world is a construction loan? So let's start, shall we?
We shall. And guys, we're going to do the format on this one a little bit differently. Usually we pause along the way for questions. With this financing presentation, there is a lot of math involved. So we want to go ahead and go through the full presentation, start to finish, and then we'll circle back and answer questions. We just want to make sure that everybody is able to follow along with the math and understand. So with this one, we're not going to pause in the middle, but we will circle back and get everybody's questions at the end.
And then I'll tell you the truth that Don won't tell you, that is Eric is easily distracted. And since I'm the one having to do the math, we really need to keep the squirrels that run around at an absolute minimum, because a squirrel goes by and it's all over for Eric. So with all that being said, will eventually get to how we build your home without a construction loan. However, before we get there, we got to first figure out what a construction loan actually is. So what is a construction loan? Well, pretty well all custom homes and even commercial projects built in the United States are built with a construction loan. So now, again, this slide is what we do not do. Tilson does not do construction loans. We'll get to what we do here in a minute, but just kind of setting the tone, setting the stage, so we all understand the verbiage that we're using. There's nothing illegal about them, nothing unethical about them. They're just costly and burdensome and time consuming, and they're kind of stressful. So most home builders require, obviously, customers to pay the cost of their home during construction. So you have to pay for things along the way. They don't have the financial wherewithal to just shell out $300,000 over 9 or 10 months and have that money sitting out there without them getting paid. Like, they have to have cash flow in to pay for their light bill and their truck payment and their cell phone bill and their health insurance to their employees and that kind of stuff. So they take draws on the construction loan during the duration. So kind of one of the things you're finding out about somebody if they require a construction loan is that, broadly speaking, they may very well not have the financial wherewithal to build this thing and get paid when it's done. In fact, they're almost assuring you they don't have the financial wherewithal to build the whole home and get paid at the end. So that needs to be discussed, at least. It doesn't necessarily have to be a red flag, but it certainly needs to be discussed. Hey, how are you backed financially? If I'm having to go out and borrow this money to build this home for you, and I'm going to cut you checks along the way, and I'm paying interest on that money, what is your financial backing? Where do the principals get their money? Who's financing this whole operation? Construction loans are they're always designed to be short term. 12 to 18 months, you'll see a little bit lower down the bullet points, but they're designed to be short term. They are typically about 2% higher than a conventional mortgage rate. So it's good right now that rates are low. That's wonderful. That means the construction loan rates can be low as well. However, that's bringing on a new set of challenges that I'll talk about here in a second. They do require typically more equity in the project. They typically require about 20% equity in a project when you're talking about doing a construction loan. And the reason for that, and the same reason that the rates are higher, is that construction loans they involve more risk because no one's guaranteeing the bank a completely finished home.
Right.
So why would that matter, Don? What's so hard? What's wrong with the bank getting an unfinished house? So you have to finish it out with their own colors, right? Why would that matter?
Well, because it's not done, and then they've got to find somebody else to finish it up. So this is actually a very risky loan on the side of the bank, because they're loaning money to you that's actually being paid to somebody else, promising to build a home in the future.
Right.
So it's kind of high risk for them.
Yeah, and building it, selling an unfinished home is much more difficult statistically than selling a finished home. And in addition to that, selling an unfinished home in a rural area, you see what starts to happen is that market of people
Even more
starts to
risky.
get real shallow. Yeah, so it's more risky. So because it's more risky, it requires higher interest rate and it requires a larger equity in the project. Because why? Well, they want you to have more skin in the game. They want you to be less likely to walk away. So statistically, the more money the borrower has at risk, stands to lose in their equity or down payment, the less likely that borrower is to put that money at risk or to walk away. And basically the way it works is a lender pays out the money in stages to the builder as the home progresses. Now, that's all well and good. So we all understand that. If you got any questions about that, you can post them. We'll answer them here at the end. But now what's happening while that's being built? Because somebody's going to be paying for this taxi ride. Is that right?
Exactly. The meter's running.
Yeah. So now a lot of people don't know what a taxi is. Back in the day, before we had these cell phone
Uber.
things and Uber and Lyft, you actually had to like raise your hand and hail this thing called a taxi. And you were going to get a taxi from, let's say, Houston to the airport, Intercontinental, from downtown Houston to Intercontinental Airport, or from downtown Dallas to DFW. And then you hopped in, and unless it was published, which it usually wasn't at the time, you didn't really know how much that ride was going to cost, depending on traffic or whatever. So you just hopped in, and you didn't pay for anything yet. You just hop in the back seat, and they start driving. Now, what's happening, Dawn, while you're driving across town?
While you're driving, there's this little meter and it's running and it's adding up how much money you owe them. So
right.
whether that taxi is moving or not, you are accruing more money that you're going to owe the driver at the end of the ride.
That's right. So anytime you hear these no payments during construction or something like that, well, what's happening is, that's true. They're going to close you on a construction loan, and then it's going to be a taxi ride. So the meter starts running immediately as soon as you close on that loan, and interest starts accruing because they're going to start taking draws on that money. They need that first draw, let's say of 30%. So, let's say a $200,000 house, they need $60,000 right away in the first 6 or 8 weeks to pay for the concrete, to pay for the lumber, to pay the labor for the concrete contractor, pay for labor for the framer. They got to pay their bills, to pay all that kind of stuff. So interest starts accruing immediately. The bank starts accruing interest, and that's handled one of two ways. A lot of them do interest-only payments through construction. So every month you're making an interest-only payment, no payment to the principal, interest only. Or otherwise it's working like the taxi ride. The interest is accruing, the meter is running, and then they're going to get all that interest in the final mortgage, in your permanent loan. And then, of course, there's also, just like there are with regular permanent loans, other costs associated like origination fees, title policy, other closing costs that typically make up about 3% of the total loan amount. So you're paying for this thing for the duration of construction. How long does that last, Don?
Until they're finished.
Right. So there's no guaranteed end time on a construction loan. And there's not really any huge incentive for the builder to get out there and work, apart from reputation, right? I mean, there are builders out there with good reputations that do construction loans, and they get the job done in a timely manner. It's hard to find in a rural area, but it's you might be able to find them. But what ends up happening is, if you get crossways with your builder, or he decides it's not enough money in it, or lumber goes up and his margins have been destroyed or something like that, and you don't want to agree to a new price, well, he's been paid all along the way, so he can say, you know what, forget it, I'm out of here. There's not enough money in it left for me. I got 85% of my money, I'm out of here. You're not worth the headache. And then you're left with an 85% finished house. Now, that doesn't sound like a lot of fun. That sounds very stressful. That sounds very time consuming. It sounds very expensive. So, what do we do?
We do things a little bit differently.
We do things a lot different. Yeah, we do things a lot different. So basically what's going to happen is you, the buyer, the borrower, are going to go get approved up front for the loan amount of whatever the contract amount is of the home. And then if you owe any money on the property, that amount as well. And then once we get that appraisal, the commitment letter from the lender, and our final building permits and engineer, all that kind of good stuff, we're going to build that house from zero to completely finished out of our own back pocket. So it's not a taxi ride anymore. Now now you're up there just riding up front with us. We're off duty. You were just hanging out. So we build this home from zero to completely finished using our own money. That tells you a couple of things. One important thing it tells you is the builder you're working with, in this case Tilson Homes, has the financial wherewithal to build this entire home, and others, by the way, at the same time, and not get paid a dime until that house is completely finished. So we have the financial stability, the financial wherewithal, the liquidity to withstand market instability, to withstand, raises in lumber prices, which is what's going on. We can weather a storm with you. The other thing is we have a kind of a lot riding on this finished project. I know
we
that
are just as invested as you are in getting it finished.
We're actually more invested. it's that they're probably more emotionally invested, no doubt about that. But from a financial standpoint, it's all of our money is out there until we've satisfied our customer. They've done their walkthrough, that we've completed our punch out list, and they go to the title company and close, and we get funded. And there's no interest accruing in the interim. It's our money. We're not getting this money from a bank. We're not, there's not a somebody that we're borrowing from. It is Tilson Homes money. It's our checkbook. It's our savings account. Nobody gets a say of how we use it, how we spend it, who's borrowing it, when a payment's due on a line of credit, anything like that. It's our own capital. And we do that because a lot of our borrowers, they're building in rural areas, and getting construction loans are hard. They're also very stressful. And really the building a home on your land can be stressful enough. You don't need to add the financial stress to that. And we fundamentally believe that. It's not, we try to make it as smooth as possible, but even with all of our effort and all of our systems we've been doing for almost a century, it's still tough. And so if we can relieve any of that stress or remove any of that friction, that's what we're here to do with the EasyBuy program, and no payments at all during construction, no payments accruing, no interest accruing, no nothing until we have the financial wherewithal to build it, and we have a lot of incentive to get it done because we're not getting paid until the house is finished. So what does that mean to you, the buyer? Well, what it means is most buyers are able to build the entire home, first of all, sooner, because you can actually do that while you have an existing home, let's say, or you're paying rent in an apartment, or you have a home you need to sell. You're not carrying two mortgages. You've got the mortgage on your current home, but you're not borrowing any money on this Tilson home until the house is finished. So it's a less total expense, first of all. You don't have construction loan closing costs up front, which are significantly expensive. We'll go through some examples here in a minute. You've got no monthly payments during construction. So again, you're not, you can take all that time to save money up and put it down on the house. You can be able to afford later on, once you get in the house, you'll have more capital to maybe do some things around your property you want to do. Maybe that fire pit, off on the side acre you wanted to do. You'll have the money to do that kind of stuff. No down payment for qualified buyers. So you have 10% equity in the total value, which we'll go into some examples in a minute. We actually don't require a down payment at all. The $1,500 deposit is all we require. And that deposit is credited to you at closing as long as we build your house. And then lower equity requirement, we only require 10% equity, where a construction loan is going to require 20, so double the amount of equity. So you free up some capital there. And obviously, you just, at the end of the day, you get more money in your pocket, and you get more house for your money. And maybe some of the things that you were willing to forego to get a construction loan, maybe some of the flooring options or countertop options, you can afford to do those with us because you're not paying for that construction loan. And then ultimately, it's the peace of mind that you get, right? That knowing that you're working with a financially sound, secure company, family-owned company. We're based here in Texas. We only operate here in Texas. We're not talking to lenders in, all over Missouri or Arkansas or New York or California or whatever. It's all happening right here. So now, here's an example. We got a little math. This is a little easy math. Example family has a house that's $300,000, and then I got my little laser pointer, Dawn. You forgot to have
Ooh, fancy
laser pointer. All right, home price is $300,000. The land, which we'll say in this case, they're going to owe a little balance on it, but the land is worth $75,000. So total, the day that we're done with this house, if we put a $300,000 house on a $75,000 piece of property, that homeowner can stick a for sale sign in it and list it on the MLS for $375,000, theoretically, right? That's what we're talking about.
Right.
All right. And they've paid $40,000 into that land. So the land's not paid off, right? They still owe some money on the land, but that's okay. We can roll with it. So total value is $375,000. Tilson would require 10% equity. And even this old Aggie can do 10% of $375,000 is $37,500. Y'all like how Dawn does easy math for me? She's so kind to me.
I think that's why we go with 10%. It's always easy math.
Exactly right. So that customer we would want them to have $37,500 paid into this deal. Well, we've already said they've got $40,000 into the land. They owe $35,000 on the land, so they'd be good in this case. And that $1,500 deposit is all we'd require, and that actually gets credited back at closing. So they would easily qualify for Tilson's EasyBuy program, and we'd move on down the road. We would build this entire home from 0 to 100% finished. No payments during construction, no interest accruing, no nothing. Now, we'll take the same example and we'll go get a construction loan, which again, a lot of builders do this. Nothing morally wrong with it, nothing ethically wrong with it. Financially, there's all kinds of things wrong with it, but we'll get to that here in a second. Total value, same thing, $375,000, right? Same house, same piece of property, $375,000 is what it's worth. Now they're going to want 20% equity, okay? Because again, it's riskier, right? No one's guaranteeing them a finished home. The builder doesn't have the financial wherewithal to build it all and get paid later. Homeowner certainly doesn't have that. So they want 20% equity. So they want $75,000. Well, the builder's not going to pay that. Okay, the homeowner's going to pay that $75,000. So they would need an additional $35,000, which might be credited at closing if the permanent loan they're going with, they qualify for that, maybe. But for sure, they're coming out of pocket with $35,000 before they're ever driving a nail.
Right.
And then so the total loan amount is going to be $300,000 for the construction loan. Your loan fees, 3% of that, $9,000. You're going to close on that, and that is gone forever. Like you're not getting that money back. It's not a deposit. That's your origination fees. That's your title policy. That's your all the fees associated with closing on a construction loan. And then so total cash to start construction is $44,000 plus whatever the builder requires. A lot of builders require at least $2,500. In a lot of cases, $5,000 to get started. We require $1,500. So you're already $44,000, like about $42,500 to the black if you go with Tilson. Did I explain that right, Dawn?
Yes. Yes. Awesome. And I think it's also important to understand that with most builders, that $44,000 that we were talking about, that's happening when you're signing a contract. So all of that's happening up front before any work is done. Before
construction ever begins. That's right. That's right. Okay, so the next is how do we calculate the interest? Like how long is this thing going to be going? Dawn, share this with our illustrious fans because you found this. This was bone chilling to me.
This was quite honestly the scariest thing I've ever seen about construction and lending and the scariest statement I've ever seen about a loan. But this is a quote directly from the constructionloancenter.com because we were trying to figure out how to calculate interest in prepping this presentation. And what they said is during construction, a construction loan's payments are based on the loan amount actually drawn. It is therefore difficult, if not impossible, to accurately estimate what the payments will actually be as the loan amount is subject to change at any one time.
Boom. Yeah, that's kind of terrifying.
A little bit.
So yeah, a good approximation, like she says here, take 70% of the loan amount, use a simple interest calculator to figure out monthly payments and multiply the results by 12 and get your total approximate interest. Well, that's a number. So going back to our example that we brought before, $44,000 plus your builder deposit. So this is kind of where we left off 2 slides back. Now we're going to jump over here and how much is this really going to cost me over the duration of construction? How much is the taxi ride really going to cost? That's the part we're talking about here, right, Dawn?
Right.
All right. So 70% of $210,000, because that's what we'd be totally going out during construction while the builder needs those draws, right? Because he's going to pay for mechanicals, HVAC equipment, roofer, sheetrocker, painter, cabinetry, all that kind of stuff. That's going out. We're calculating. We're being actually very conservative here, 4.5% interest. That'd be like the lowest.
Probably going to be higher.
It's probably going to be higher than this, but we're trying to be fair to competitors who require construction loans. So that simple interest is just below $10,000, $9,500, gone forever. All right, those are interest-only payments that are going out for the duration of construction. So the total amount of money that's gone forever that you don't get back that you could have spent on something else is $18,450. You can do a lot to a home for $18,450, but in this case, it's gone forever. And your other capital that's tied up is the 35 grand, which you may or may not get back depending on what permanent loan you qualify for, and then the builder deposit. So significant amount of money right here. That 18.5 is nothing to sneeze at. That is a significant amount of money. Whereas with Tilson's EasyBuy, we're still at $1,500 out of pocket. Okay, even though we had a balance on the land, they still owed money on this property. They're still only out of pocket $1,500, and then total paid gone forever $18,450 on the construction loan, plus that. So total cash out of pocket $53,450, and this is a conservative estimate. Okay, guys. So this is real money, and this is just the black and white nuts and bolts math of it. This has nothing to do with the peace of mind of knowing if the builder's required you get a construction loan, you might actually have a higher net worth than your builder. So that's something to consider as well, particularly out in a rural area. You don't know. Unless you can find out more about their financial backing, you just don't know. Whereas with Tilson, it's our own cash. It's our own capital. So now the fun begins, because now we got questions, and I got a whiteboard, a digital whiteboard. So I guess there's a way I can probably unshare this. Let's do that. I can do that. Oh, it's us. Look at us.
There's your whiteboard if you need it.
I have it. I'm going to turn my hippy dippy pen on.
Ooh, fancy.
The pen is mightier. Well, never mind. Okay. So what kind of questions do we have? Questions about equity, questions about homes, questions about appraisals. I have an appraisal pulled up. I have a commitment letter pulled up. We can talk about that a little bit, but let's see some folks, if they've got some questions. Dawn, what can we do to help these folks answer how they finance a home?
All right. Well, I'm going to go back to the beginning and just pull up the questions that we have.
Okay.
So let's see. Brett is asking about the chances of building a garage apartment. Is that something we can do?
It's actually pretty rare. If it's only the garage apartment, I'm not sure that'd be we'd be real competitive in doing that. We do have a casita plan. That's just a living area downstairs, but we don't have any plans that I'm aware of or haven't done that where it's just a garage and then, like, I guess it'd be 400 or 500 square feet above that. So,
okay.
The chances are 13%. How's that? Like a chance of rain. I'm not gonna say we're not gonna do it.
Maybe. All right. So Joseph is asking, who is the best to finance rural land in Texas, and how much land is required to homestead a house property in Texas?
Okay. So financing the rural land, I don't know that I have an answer for you on who the best is. Okay. There's a lot of companies out there that do it. There's Capital Farm Credit. There's Texas Farm Credit. There's, I know Prosperity Bank does them. First Financial Bank. There's a lot of banks that can finance rural land. Obviously, Capital Farm Credit is probably the largest in Texas that does that. That since they are a CCA partner of ours, I'm not hesitant to recommend. I don't hesitate to recommend them. They're good at what they do, but they're not the only ones that do what they do.
I've also been told local credit unions are a good
local credit unions. That's a great point. Yeah, local credit unions are good. So yeah, they're good. How much required for homestead? That's really up to your county appraisal district. So you can call your local appraisal district from wherever county that you're in. Grimes County, Montgomery County, Kerr County, wherever you are. Call the appraisal district and talk to them. And a lot of times you can go in. Even still, you can go in these rural areas. They'll see you. But give them a call, or even go to their website, and a lot of them have the information there. But you can certainly find out exactly how much land is required. It's typically about an acre, not even quite that much in a lot of cases. So let's say you've got 15 acres. And you want some of it to be ag exempt and some of it to be homestead, obviously, if you want the homestead exemption, because you cannot homestead and ag exempt the same piece of property. That you can't do in Texas. So it's got to be one or the other. So, but they typically require just a minimal amount of where the house is sitting, your primary residence is sitting, and then everything outside of that can still be ag exempt as long as it's over 10 acres.
Okay, great. And then we do kind of have, I guess it's more of a side conversation than a direct question, but I thought that we would address it. Well, Wendy is saying, that it's great that you don't have to sell your current home when you work with Tilson. If you don't sell it right away, you're continuing to build equity in your current home. And Samantha was commenting that, honestly, that she understands it's not always the case that you don't have to sell your current home. So I thought maybe we could talk about when you might need to sell your house before we start to build and when you don't.
Perfect. So, in a lot of times, it would depend on how much equity you already have in your current home. So, what he's saying is fundamentally true. If you can still stay, if you can qualify and still stay in your current home while your new home's being built, then yes, you would still be building equity in that current home because you're still making payments.
Right.
Please keep making payments. That's very important.
Yes.
So yeah, you keep making those payments, so you would theoretically, yes, still be building equity in that. Samantha is also right. There are some cases where maybe the lender won't allow, like, hey, look, they're that marginal from a qualification, usually from a debt to income ratio standpoint. They're just too marginal for them to be able to qualify for both, at the same time or something like that, or they don't have very much equity built up in the existing home, and so we'd like to see it on the market earlier. So it's a very case by case basis, but you're both right. You are definitely building more equity if you're still making payments, and it could be that you do have to sell your current home prior to construction starting, but that is handled case by case, and it's really actually pretty rare that we have to do that. So in this market, okay, now
and
it's
that's
November
usually
2020.
going to be a mortgage company saying, because we do ask that you qualify at the beginning for your final 30-year mortgage. So we're looking for that qualification. So it's when the bank comes back and says, hey, in order to qualify for this mortgage, you're going to need to sell your current home. That's when we would be asking you to do that.
Yeah, and we'd want to look at that, like I said, on a case by case, see how much equity you got, see how fast those homes are moving in the area, what kind of price you're trying to get for it. Like, if you're going to asking $100,000 more than anybody's getting in the area, then that's probably going to be a problem. It's not likely to happen. But great point.
Let's see. Bilal is asking, what if you show personal funds instead of lender pre-approval?
Well, then you would typically be paying cash. So if you've got the cash to build the home, then that's one thing. However, if you don't intend to actually use those funds to pay for the home, then you would still need to get a loan approval. The verification of deposit or verification of funds that I think you're talking about, Bilal, it only applies if you are in fact using those funds to pay for the home. Because we do cash deals a little bit different. We give a discount for them, and it is done in more of a draw schedule. But just showing us that you had $400,000 in a 401k or retirement account or even a savings account at some point, but you're going to get a loan for it, we'd still want to be sure that you can qualify for that permanent mortgage through a Fannie Mae type of loan program, because a lot could happen in the 9, 10, 12 months it takes to build the whole, to design, construct, and close on the Tilson home. And we wouldn't want those funds to be gone, and then now you don't have a way to pay for the house and you can't get a loan. So if you plan on paying cash, that works. If you plan on getting a loan, we do have to have loan approval from a lender.
Okay, makes sense. And then Bilal is also asking, what is our smallest plan?
The San Antonio, it's a little over 1,200 square feet.
Perfect. Kenneth is asking if there's any way to build a home using a USDA loan.
There are ways to build homes using USDA loans. We've done like 2. It is very difficult. There are income limitations, and they vary by county. There are obviously price limitations because it's designed for a rural, low-income program. So they put a lot of restrictions on how much money you can make, how much land you can use, how much the house can actually cost. So there's a lot of restrictions on that. It makes it very difficult.
Okay.
Not impossible, but it's less than a 13% chance.
Okay, that makes sense. Bilal is asking if we build in Trinity, Texas.
Absolutely. All up and down Highway 19, 294 to Groveton. Yes, anywhere in Trinity, Texas, Trinity County, you bet.
All right. Carmen is asking, do you have the land? We do not own any property. We build on our customers' own property, but we can definitely help you with finding some land. We do recommend a good website for that is landsoftexas.com is a good place to look for property if you're searching. And we also know some various developers in the different areas where our design centers are.
That's right.
Monica is asking if you can change Tilson's floor plans.
Yes, ma'am. To put it lightly, yes, ma'am.
All the time.
Very few people, but yeah, thank you for asking, Monica. That's a great question. But yeah, the customization is almost limitless.
Absolutely. So Kathy is asking, if we want to start our home in approximately 18 months, how many weeks, months should we meet with an associate to get the ball rolling?
Look, I would start meeting with them now, Kathy. Honestly, I mean it doesn't take that long. Even with everything that's going on, it doesn't take 18 months. It does depend on kind of where you're building. So there's definitely a slow down, pause, rewind button. I have never in all of my career seen a fast forward button. At least I've seen it work well. It's like trying to load a train when it's going down the tracks. It's somebody's going to get hurt and make a mess. So I'd recommend start now. I mean, we were telling folks 12 to 14 months. Seadrift, Texas is where you are. Okay, so yeah, it doesn't take that long in the Seadrift, Texas area. It's you're kind of unincorporated Calhoun County, Texas, for the most part, or even Matagorda County, I think. But it's I'd still allow for 12 to 14 months and start that process then. But you can start doing the design process now and start budgeting. Because again, if you want to be in the home, you really count when you want to be in that house, count back about 12 to 14 months. That's when you want to start the paperwork. But you can start the design process anytime. We don't charge for doing that.
Great. Jacob is asking if you can talk about low appraisals at the upfront site evaluation.
I can, yeah, I'd be glad to. So what Jacob's asking about, and it can happen. I've got let's see if I can share. What am I going to share here? I can share, well, let me see here.
So while Eric's looking, what Jacob's talking about is, in a perfect world, it works exactly like the math we showed. What it costs to build your house is also what the bank is going to say your house is worth. But in some cases, especially in rural areas, it's hard to get an appraisal to make it match the cost that it takes to build. So he's asking what happens if that appraisal comes out lower than what we were expecting.
Okay, so if you'll share if that's possible. Okay, so you may have to hide us and be able to see the thing, but. All right, so what we've got here, I'm looking at this is an appraisal, an actual appraisal done on one of our homes. I've hid the name to protect the innocent.
Right.
But this was done in Walker County, Texas. Our contract amount was this $276,524 here, and so there's a lot of things on here. And obviously, the location is rural. These are things that the appraiser fills out, not us. This is a TREC form, or Texas Real Estate Commission promulgated form that appraisers use. It talks about it's 1 acre is what this one is, and it has what type of foundation, what quality of build, and it has a driveway, and a lot of information. Significant amount of information is in here. But most importantly, what's in here is the comps or comparable sales. Now, I happen to know this isn't a deed restricted subdivision because we built numerous houses there, but they used a comp that was pretty close by that was $375,000, and one that was $361, and one that was $342, and now, but this one was bigger, so they reduced the amount, and this one was bigger, so again they reduced the amount. So they make adjustments. These are called adjustments. What type of insulation? Do they have a fireplace or not? So get pretty detailed on net adjustments, gross adjustments, and again, this is regulated by the state of Texas. This is not something that we get to interfere with. And this one ended up coming in at $315,000. So this appraised at $315,000. So $276 is the loan amount, $315 is the total value. So these folks had about 12%. That's like an 87 or 88% loan to value. And this was pretty recent. I mean, this is less than 2 months ago. So this one came in at that. Now, so go back up. Don will cancel this out. So going back to what Jacob's asking, I'll try and do a math example. I want to share this one. So let's say that same 276, that's the house. Let's say that's the loan amount we're asking for. Let's say that the appraisal came back at 280. All right, now. What determines that value? Is it the house? What determines this value is those comparable sales in the area. So, our houses could appraise for more than they cost in an area that has larger homes or more expensive homes, right? And they could appraise for less than they cost depending on what's around them. If you're building in an area that doesn't have a lot of comps that support, new construction, or there's, a number of mobile homes, or there's some foreclosures that have happened around near the area. All of those
Or there
things.
just haven't been a lot of homes that sold lately.
Yeah, that's true. Yeah, it could happen. Yeah, because these comps have to be typically less than 6 months old for them to be acceptable. So in this case, loan requested is this. But now Tilson's we're gonna 10% of this number of the value, okay, is what we require. So that'd be 28,000. And in this case, the person would only have like 4. So this particular customer would need to come up with about $24,000 in equity of some way. Now, what does that mean? They can do improvements to the property. They can do it as a cash down payment. We've had customers that do this as an equity deposit. So they deposit money with Tilson, and we hold on to that 10% until the house is completely finished, at which time, if you qualify for something, at a higher than 90% loan to value loan, we can release those funds back to you. There's not a lot of loan programs out there that do less than 90. There are some. You can get 95%. FHA is 96.5%, which is crazy to me, but it's a real thing. But anyway, in this case, you would need to come up. And now, again, the beautiful part about going with Tilson is we know this before we ever drive a nail. Mm-hmm. There's no house under construction yet. We haven't started construction. We will not pull something like this on a customer and have a house already under construction and do that, which is when you're doing a construction loan, you may not find this out until completion. You may not find that because on a construction loan, it doesn't work the same way. You can actually close on a construction loan without an appraisal. But
right. Remember, all that first draw usually comes out right after you sign your paperwork. So there's been no appraisal.
That's right. So at least with us, before we ever drive a nail, exactly what your equity position is going to be and if you're going to need money down. Now, what could happen is we're going through construction, maybe 60 days out or something from completion. It is possible to order another appraisal. Maybe some other houses have closed, particularly if you know of one that closes. Like, hey, a house for $315 just closed like 2 months ago. Like, boom, let's go update the appraisal, and that could actually increase your equity position. So there's lots of ways to handle that. It doesn't happen a lot, but it does happen. So Jacob, I appreciate you asking, and I hope this helps in dealing with that. Dawn, you got anything to add to that?
No, I think you covered it.
Oh, good. Let's see if I can. All right.
Alrighty. Let's see. Monica is asking what credit rating we require to start building.
I think it's we're looking at about 680. Is that right?
Yeah, that's what our preferred lenders are asking for right now.
Yeah. There are programs out there for lower, but I'd recommend you having about a 680, just because we don't know what the market's going to look like when you close in 9-10 months.
Right. And part of with interest rates being so low, banks are being very careful about who they're lending to. So the requirements keep going up.
Glad you mentioned that. Yes. And because construction loan interest rates are so low, a lot of banks aren't doing them anymore.
Right.
Because it's not worth the risk. Yeah. When construction loans are like the 6% mark, something like that, they don't mind doing them. When they're getting down below 4.5%, they're kind of like, yeah, not really enough to make it interesting for us. So no thanks. We'd rather not.
Yeah. All right. Joseph is asking if we'll build plans that are from architects that we do not employ.
We have, yes. You can bring us a set of plans. It doesn't have to be from an architect. In fact, I would not encourage you to use an architect. Residential designer is usually better. But if you want to use an architect, you may. But I would at least bring us preliminary design first to make sure that it's something that, so we can start on the pricing point at that point before the architect gets too out of hand. Mm-hmm. We've seen that.
Absolutely. All right. Felipe is asking how long it takes to get pre-qualified and when does the final qualification take place?
Great question. Great question, Felipe. So pre-qualification, we usually know that within 2 or 3 days. We can get a pre-qual back from a lender in 48 to 72 hours. The actual total final qualification, they're not going to know that until you've actually gone under contract with us. So that $1,500 deposit, because they need a couple of things that appraisal I just showed you. They need a set of plans. Excuse me. They need a set of plans. They need a contract from a builder. They need obviously a map to your property. So they need all those things together to give to the appraiser to send him or her out there to appraise that house on your property as if it were built today, what it would sell for. So we need that, and then they're also you need the usual, like your last 2 years of W-2s or tax returns, your last 30 days pay stubs, your last 30 days bank statements, retirement account statements, all of which is available online now. So it's a lot easier to get that.
A lot easier now.
You have to go through the bank boxes in the attic like we used to have to do back in the day. So anyway, yeah, that process usually takes about 3 to 5 weeks, depending on how long it takes for the appraiser to get the appraisal. That's usually the longest part on the schedule.
And then it's important to note they're going to do that again when we get to the end of construction. You're going to go through that qualification process again just to re-verify everything.
There you go.
Don't make any major purchases during this time, please.
Awesome.
All right. Monica's asking if we have experience with building accessible homes. For example, people with mobility disabilities, doing things like lowering the countertops, cabinets, etc.
We do have experience with that. Yeah, there's actually a whole term for it called universal design. The National Association of Home Builders has a designation called CAPS, or Certified Aging in Place Specialists. So yes, it's something that we have done. We do wider doorways, we do ramps, we have lowered countertops, do grab bars, all that kind of stuff. You asked it correctly. The building accessible homes or universal design mobility. We do not call it ADA, American Disabilities Act compliance. We don't go so far as to call it that. That's a commercial rating. But for residential, yes, we can do universal design or certify or aging in place with mobility issues. Okay,
great. Carmen is asking if we can do duplexes, triplexes, or quadplexes.
Not at this time, Carmen. That's not something that we're into. Detached single family residences is all we roll with.
Can we build in Walden on Lake Conroe?
We can and have. We built in Walden on Lake Conroe and Walden on Lake Houston.
Great. Kim is asking where the money comes from to close once the house is completed. Is it new loan from any lender?
Okay, so we're going to know typically that, Kim, before we start construction, you're going to get approved up front from a lender. We have a couple that we work with that are preferred. AMCAP Mortgage and CMG Financial both do a really great job for our customers, and they are well-versed in build on your lot. They're fluent in that. We don't get any kind of kickback from them. Or
they don't look at us crazy when we tell them we want an upfront appraisal.
Yeah, so that's where the money comes from. It comes from whatever permanent mortgage company you've decided to go with. And so, yeah, that's how it works. You get approved. But we'll know that before we start construction. We're not going to start construction until we have loan commitment. So
great. Jacob is asking when the mechanics lien is released.
Actually, Jacob, that's a great question, because we get that come up with mechanics lien. Why you gotta do a mechanics lien? Well, guess what? If you build a custom home with another custom home builder and they use a construction loan, guess what the construction lender puts on your property? Mechanics lien. Yeah. So they have a lien on your property. We have competitors out there that their only ammunition against using the construction loan is Tilson puts a lien on it. Yeah, well, so does the construction lender. So you're in the same boat.
Because your builder didn't do it doesn't mean there's not somebody else doing it.
That's right. It's how the loan's secured. So the lien, actually, what ends up happening with the lien and the promissory note, Jacob, is that it gets transferred to or assigned to whatever lender. So we just talked about AMCAP and CMG. So let's say we get to closing and AMCAP funds Tilson on your behalf, that $276,000 we were showing earlier. We get that $276,000 wired to us from AMCAP Mortgage. The lien is assigned to them. So they have a lien on your property while you pay them back. If you pay it off early, then the lien's released, or otherwise it's released once you pay your 30 years. So that's how, the lien is assigned to whatever lender. And so we have some customers that get a loan up front and then something happens and they retire or they get a severance or they win the lottery or their parent, they get an inheritance and they pay cash for the house, in which case it's released whenever we get paid.
Great.
But Tilson's out of the picture once we're funded. We don't have a lien on your property anymore once we're funded.
Okay, that makes sense. Joseph is asking if his current home is paid for, can that be used as the collateral to build?
Not typically, Joseph. Only if that equity is then put into the land in some way. So, and again, only needs 10%. We have had some customers that have taken like a home equity line of credit, which you can do here in Texas, and turn around and put that on the land or buy land with it, because particularly if they intend to sell their existing home. Even if you don't, you can still cash out, refinance, get the money out of there and pay the 10% down on the land.
All right, great. Monica is saying that she would like a home built with 2 masters. Is that something that we can do?
Dawn, do we do that?
We do. We can absolutely do that. You can either do them as full size 2 masters, or we can do it as like a guest suite. It's really up to you. Patrick is asking if we can expand on the qualification process. Is the loan completely qualified at the time building starts? Is there another qualification once the home is built? So yes.
Patrick, yeah, great question, man. These people have done their homework, Don. They're smart. We did this last time in March, and either y'all were not as well versed or you had other things on your mind, strangely. So
I think that's only the second one too. So I think they didn't quite trust us that we'd actually answer them.
Okay, so to expand on the qualification, yes, the loan is completely qualified for before we ever start construction. So you have the peace of mind and security of knowing, and we have the peace of mind and security of knowing that you qualify for this amount before we ever start construction. So that's, everybody wants that before we go out and start turning dirt on your land and start spending money. Now, during these times, the answer to your latter part of your question is also yes. They're going to update it towards the end. Now, it's not the full-on qualification process again. They're going to do what's called an update. Like, do you still have a job? That's something they're going to want to know, in the next 6, 8, 9, 10 months. Are you still employed? Did you go out and leverage a bunch of debt? So they will repull credit. So we tell people, don't go out and buy a bunch of stuff. Don't go open new credit cards.
Buy a whole bunch of furniture for your new house.
Don't buy your furniture until afterwards. Yes, they go check all of those things to make sure that you haven't leveraged a mountain of debt, that you're not, you didn't get a federal tax lien slapped against you sometime during the duration of the build. But it's an update. It's not the full qualification process again. So.
Great. Robert is asking if we require the 10% equity on a VA loan.
So actually we do, Robert. But I think I know why you're asking that, because VA is kind of known for doing their 100% financing. And really, you're still getting, if you have 10% equity in the land, in the total value, all of our customers end up getting 100% financing. They're not paying anything down. The land, most of our customers, even supposed to do VA, especially ones who do VA, they own the property. They either bought it a long time ago, or it was gifted to them by family, or they bought it through the Texas Veterans Land Program. So they've got the 10% anyway. You're not, all 100% loan means is that you're not putting any money down. So it's kind of quirky how they advertise that, but it's really, the 100% VA loan program is much more common among resales. Like you go into a subdivision and buy a home that's existing, and they will finance 100%. And it is an entitlement. It's the only entitlement. And as veterans, they are entitled to that. That's how that works. So it is a 100% loan. But with us, you're still going to have the 10% by having money into the land. So we could say yes, it's 100%, but I feel like it's misleading. So.
Right, that makes sense. So we have a question from Heidi. They're asking, what additional qualifications are needed beyond the pre-approval 30-year mortgage? Is it just the 10% equity and $1,500 down?
Yeah, that's it.
Yep,
if you can get approved, you're good. 10% equity, $1,500, and it's off to the races.
Great. Linda's asking if we can use a customer's plan. Yes, we can. What we're going to do in that case, honestly, to get you pricing and kind of an estimate as quickly as possible, is we're going to look at our own plan database and see what's closest to it, and kind of make changes to that to give you kind of an estimate of what it's going to cost you. And if we're in agreement on budget, then we're good. And we'll go ahead and get your actual plan priced out.
For sure. That's right.
Kim is asking about the website that I mentioned earlier. It's called landsoftexas.com.
Yeah, landsoftexas.com.
Lands of Texas. And we just like that one because it allows you to search just for rural property and sort by county, and it's not going to be distracting like a Zillow and show you existing homes and things like that.
Georgina, what are we doing with our lumber prices? Actually, we've already pretty well had all of our increases for lumber, so we've kind of see it. We hope that it has peaked. We think it's about plateaued is a better word. It's not peaking because it's not going down, but it has plateaued, and yeah, we've already increased our prices. We did that in August, September, October. We're not seeing another price increase till probably around the first of the year, and we'll evaluate then.
Great. Kathy is asking, she lives in Georgetown, but they have property in Seadrift, Texas. Would they use the local design office?
Totally up to you, Kathy. I mean, the pricing is based on where you're building, not where you buy from. So if going to the Georgetown office is convenient, you are going to have a couple of appointments there. So you've got obviously any kind of design changes or consultation pricing you're going to do, your color selections. But the selections will be done, the selections we have are the same everywhere in the state, so it doesn't matter. So if Georgetown's convenient, that's what I'd recommend.
Absolutely. Bo is asking if we can build a home from a set of plans that he purchased online.
If it's in our wheelhouse, you bring it to us and let's take a look, and we'll double check and see. But most likely, yes. It's going to depend on if it's something that we're comfortable with and it's in your budget.
Dico is asking, I am in a spray foam county. Can I place pre-purchased standard insulation between a wall for silencing purposes? So between the living room that shares.
Yeah, Dico, you can absolutely do that. I would just caution against. I want to manage the expectations on silencing. I prefer maybe something like sound inhibiting, and the reason for that is sound is still going to travel through, even with insulation, because it's going to travel through the studs. Oh, look, you brought it up. So I was drawing this is an overhead view of a wall, Dico. This is just for you. Overhead view of a wall. So what we're saying is, like, here's the family, and here's the master. Let's say this is where we typically find people want to do it, and so what he said, there's studs in between here. Here's a stud. Here's a stud. And what he's saying is, hey, can we insulate between the sheetrock walls there? And the answer is yes, we can. Right? There's a stud. There's a stud. But what I always caution people about is sound is traveling. So let's say sound is traveling from the master here, and it'll help deaden it some inside here, and less will get through. But that same sound wave is going to travel through this stud, and it's not going to deaden it as much. So the sound wave can still travel. It's not going to be totally silent. There are wall boards. There's products out there that do a better job of actually sound insulating. If you're really concerned with that, I want to look at that. And another option is to actually offset the studs. So you do a 6-inch wall, let's say, instead of a 4-inch wall, but you still use 2x4s, and it ends up working kind of like this. Looks like a jack-o'-lantern. But so this is a 2x6 wall, and then you insulate, and now you made it where the studs aren't touching anymore. Anyway, probably more than you want to know, but there's ways that we can tackle that. We've thought of everything.
We always learn so much. Bilal is asking, what is the approximate cost to build the San Antonio plan in Trinity, Texas?
$153.
There you go.
I cheated. I looked.
Jacob is saying that they challenged their appraisal 2 times and got the appraiser to increase the value by $50,000.
There you go. So yeah, that's a rare occasion, Jacob. But
congratulations.
It takes some time, and a lot of them won't budge on it. But man, if you got it done, bullet for you. And we have seen that happen. It isn't something we want to promise people that can happen, because they are not obligated to do that. But man, good for you. That's awesome.
Good job. Joe is saying that he joined us a little late and missed the requirements for VA. Could you state again if 10% or what amount?
Yeah, I think he actually was on. Okay. I saw it. That came up quite some time ago, I think.
Okay.
So he got it.
All right. What about if the market drops and your home is valued less at closing than when original value appraisals was in equity?
Jason, that's a great question. I have not seen that happen in the 20 odd years I've been doing this in Texas.
There really is not been a lot of times in real estate where prices drop.
Yeah, you see it in like the Sandy, your Las Vegases, your Arizonas, the Scottsdales, the Miamis, like where you see wild 40, 50, 70, 80% home inflation prices. Texas is not really known for that. We're always kind of slow and late to the party. It's kind of how we talk. It's how we operate. It's we're good for about 4 to 6 to 8% of appreciation a year. It's not real exciting, not real sexy, but it's pretty safe. And so the good news is when markets do go down, we don't have that sharp drop of 30, 40, 50% value. So it's not, I mean, in theory, I guess what you're saying could happen. I haven't heard of lenders reordering appraisals at the end to verify a bottom of the market, particularly in rural. It just doesn't change that much rurally.
Okay, makes sense. Kim is asking if there are model homes around Texas for every home we offer. Not every home. Yeah.
I wish. Well, part of me wishes, and then part of me says I don't want to build 47 model homes.
That's a lot of maintenance.
That's a lot of maintenance. So yeah, they're not about half actually. We got about 20 plus, 22 somewhere in there of the 47. So we've got a large number of them, but not all of them. But Dawn is rendering them.
Yes, we are working on doing renderings and making sure that now we're watching when customers have built a home that we don't have a model for. We're trying to get out there and give you guys some virtual tours and some pictures and make sure that you're able to kind of visualize what that house looks like.
Okay.
Melody is asking if the land is paid for, you don't need 10% down. So
all right. Probably ought to do another example. So here we go, Melody. Thanks for asking. So let's go here. So let's say, again, let's go back to our 275 example that's the home. And let's say the land is worth, I don't know, 35,000. We'll do a little more easy Eric math. So that's home value. And there's land value. So total value when we're done, we're all in at what are we at 310? Oh, we're sitting at?
Mm-hmm.
I like it. Total value. So what we would require is 10% of this number, which would be 31,000. Well, so if your land is paid for, in this example, you would need nothing down because you're covered. You've got the 10% taken care of. So yes, if you've got 10% equity in the total value, you don't have to have a down payment or anything. $1,500 and an approval, and we're off to the races. So thank you for asking.
All right. So Jackson is saying that they bought their land with owner financing and $5,000 down on $60,000. How much would we need to have an equity to begin building in the Tilson buying program?
Okay, so we got $60,000 is what the land is worth. You've put $5,000 down. Now it's going to depend on what house you actually choose, but so basically we still owe $55,000 on the land, right?
Mm-hmm.
So let's say that we know the land's worth 60. It may be worth more than that. I don't know how long ago you bought it, but it sounds like pretty recently. Let's say now that you're looking at a house that's 300, just for round numbers. Oops. And we know the land's worth 60 because we just paid for that. So total is going to be 360, which times 10% is 36. You have 5. This is kind of interesting that it works out this way. You've already got 5,000 of that into it, so you would need 31,000 either as a down payment to Tilson, or you could pay it into the land. So it doesn't have to be like it doesn't have to be cash out, but we've got our own capital.
Right.
So the 31,000 is what you would need either down or on the land. And that would meet the 10%. Or it could be a deposit. that you would lose if you didn't finish the home, for instance, something like that. So hopefully that answers the question.
Okay.
All right.
Monica is saying that she noticed that our plans are brick or hardy plank. Can we build a home out of metal?
They're actually brick, stone, stucco, or hardy plank, and we don't offer any kind of a metal option other than metal roofs.
Okay.
Because those are typically metal buildings. Like the house itself is not it's not covered in metal. It's a metal building, and we don't do metal buildings. Great question, though, Monica. Thanks for asking.
Angelica is asking about what the price would be on our previous Salado plan in Grayson County.
We don't have pricing on the Salado any longer. We can get you the Gonzales. So maybe Don will run to the next question, and I'll price out the Gonzales up in Grayson.
Okay. Let's see. The next question is Wendy's asking about the average price per square foot to build.
Oh, I'll let you handle that while I look at the Gonzales.
So Wendy, we don't like to talk about average price per square foot because we think it's a very misleading number, and we don't like it when other builders are using it because there's so much that goes into a home that it's just a really kind of an odd way to price it, because it's going to vary based on materials that are being used, the actual layout of the home, how much framing is in it.
What square footage they're dividing it by?
Yeah, whether they're actually looking at living area square footage, which on our website, all we list is the living area square footage, but some builders are calculating based on the whole foundation square footage. So they're including porches and garages in their cost per square foot. So rather than quote in that way, we've chosen instead to show all of our prices for our houses as they come. So if you go onto our website and you look at our floor plan listing, you can choose the county where your property is located, and it'll actually show you the starting price for every single one of our homes.
Yeah, but we do upfront contract pricing, and then we line item any changes you make, so you know the exact hard number price before and you can divide it by whatever square footage you want to. You can add the garages and porches in there if that makes you feel better or whatever. But yeah, price per square foot is a very misleading thing that builders do. So our prices range from about $150,000 to about $600,000, and everything in between. And
if you are talking to other builders who price that way, ask a lot more questions.
Yeah, do. The Gonzales in Grayson County, which is basically the plant, the Salado was based on that, or it was based on the Salado, is $222,500. Starts at $222,500.
Martina says that she's not looking at building for 4 years, but she's a planner. What am I allowed to get set up and started now?
Martina, 4 years it sounds like a long way away. It'll be here before we know it. But yeah, I mean, certainly I wouldn't bother too much with pricing right this second, of course, because I don't know what they're going to look like, or interest rates. That might be something else that changes your time frame. I don't know. But you can certainly set up, design. We can start sketching plans with you. We don't have a problem doing that. We've got people who've been in our database for 8-10 years that sketch out plans. So
yeah, and if you already have your property, kind of bring in your survey. Let us take a look. We can identify if there's any issues that you need to work on. With that, look at easements and those kinds of things.
Thank you for asking.
Yes. Felipe is asking if our prices get adjusted again at the beginning of the year, is that going to impact a customer who is under contract already?
Great question, Felipe. So the answer is, broadly speaking, no, it does not. I mean, as long as you're kind of fulfilling the owner responsibilities that are listed out in our agreement, then no, it doesn't affect you. If you're still, but I mean, if 4, 6, 8 months go by and the land's not been cleared yet, or you don't have a survey yet, or maybe the deed's not even in your name yet, or a county, you're having to replat in a county or a city and that's not done yet, then yeah, we would have to have a conversation about, hey, we can't hold these prices indefinitely.
Right.
But no, as long as you're still fulfilling the owner's responsibilities, then your price is your price.
Okay.
Thanks for asking, Felipe. Great question.
Thank you. Lisa is asking, she has 5 acres in Travis County that has a house on it currently. Is it possible to build another house on that property, or is she going to need to subdivide?
So Travis County is probably going to make you replat or subdivide that land. I'm almost certain that Travis County is going to require that. They're pretty sticklers about that. So yeah, you could check directly with the county, their permitting or their engineering department, but I would bet heavily on they're going to make you replat, which is not. I mean, it can be done. It's not an impossible thing to do. It does take time and it does take money. So if you need help with that, let us know. Our Georgetown and San Marcos offices have both had customers that have replatted in Travis counties and others. It's not just Travis County. So.
Okay. Ashley is asking if there's a website where they can view to change up the Tilson floor plans and see how much the cost changes and how much the total cost will be overall for the home. So you can go to our website, and on most of our plans, all of our like pre-designed, what we call custom options, are on the website, so you can see what changes are available. We do not price those on the website. You would need to talk to a design consultant to get your actual price, just because we want to make sure that everything's laying out exactly right.
Yeah, it's something we would love to work on, Ashley. Thanks for asking that. If we can figure out a way to add it to cart Amazon style and just go build it, that'd be great.
Just a lot of counties and a lot of variations to try to keep track of. Ray is asking if infrastructure and utility connection costs are included in our construction costs for the home. So talking about water, electric, septic, driveway.
Okay, so definitely water and electric, those are included. Up to 50 feet is already included in the price. Septic is not included because some customers don't need a septic. Some customers have a sewer system. So we don't include septic in the what's called quote unquote base price. And then same thing on the driveway. You know, some of our customers are on a city lot, it's 25 feet off the road. Some of our customers are on 500 acres and they're 3/4 of a mile off the road. So we can do construction drive, we can do permanent drive, and we typically bid that at what was called our stakeout appointment.
Okay. And now on water and electric, they are going to be responsible though for the actual hookup fee.
Yeah, well, if there's already one there, that's right. Yeah, if there's not already a water tap there or a water meter, then yeah, you would have to get that set. But if there's a water meter there or a tap there already, that you're going to be taken care of. You know, electrical, a lot of times doesn't cost anything to get it done, but it can. And that varies based on your electrical supplier. So, you know, is it Houston County Electric Co-op? Is it Centerpoint? Is it Pedernales Electric Co-op? Is it Grayson County? Like, just we'll find out who it is, and we can help you out with that.
Okay, great. Georgina is asking if we know the cost for the cathedral ceiling in the family room in the LaSalle or the rock wall.
Yeah, I don't think I'm going to have that pulled up. Well, I might. Go to the next one and I'll see.
Okay. Let's see. Carrie's asking when do you pay the remaining down at initial, when you put $1,500 down or when you close in the end? So okay, I think asking if we don't have the 10% equity, when would that be paid?
Oh, well, you pay the remaining down until you put 15%. Okay, so if you don't have the 10% equity, we would require whatever the difference is before we start construction. So prior to the onset of construction, you'd need to get to that 10% number, and then we would build from there.
Okay.
And the LaSalle, I got the LaSalle one, so the rock wall will be probably pretty close. You're looking at about $7,700 to do the cathedral ceiling in the LaSalle, unless you want it to be the cathedral ceiling and the rear porch cathedral ceiling. That's closer to like 18. So I don't know which way you were thinking about doing it, but somewhere between $8,000 and $18,000 will get you pretty close, depending if you want just the family room or you want the family room and the porch and the truss and all that.
Okay. Cleve is asking if we have built garages that can fit an RV.
We have. Yeah, we need to price those out in the design center, but yeah, we have done that before, Cleve. Thanks for asking.
Okay. Cornell is asking how much we would charge for construction drive.
Ooh, Cornell, it varies across the state, man. So we typically get bids from local contractors at the time because it can vary so much based on where the rock's being hauled in, you know, what kind of property it's going on. If there has to be a culvert with it too. So
how long does it need to be?
Yeah. So let us get on your property and take a look, and we can get a bid before you get real accurate.
Okay, awesome. Martina is saying that she has 11 acres, but only wanting to build in 1 to 3 acres. What kind of survey would she need? And she already knows that her land needs to be cleared before the stakeout. All
right, Martina. And hey, thanks for watching us earlier in Bryan. I know you were on there. So I appreciate that. So 11 acres, only want to build on 1 to 3. So you're going to need what's called a survey out, which means that so you'll need first a boundary survey for sure. Everybody's going to need a boundary survey with corner pins located and all easements shown. Boundary survey with corner pins located and all easements shown. That's something. That's a thing.
Okay.
So you're going to need that. And then in your case, you would need also, Martina, a survey out. So they still have to survey the whole 11 acres because they have to survey the whole 11 acres so they can survey out the 3 inside it. You know, we can't see how much to cut out of the pie until we know how big the pie is. So though it is a little more, obviously, because you're in essence paying for almost 2 surveys, like 1 2/3 surveys. So you'll need a survey out. And to that, I would also add, let us help you check, or check with your local county to make sure that they're not going to require some type of a replat or official subdividing process. Okay, a lot of rural counties don't mind you doing that. That's something that you can do. What you can't do is you can't landlock it. That's something to think about. I'm glad I mentioned that because I could get sticky. So on the 11 acres, I'm drawing now, Dawn. Watch.
Okay. He's drawing again.
I'm drawing. Feeling the drawing spirit. 11 acres. Okay, here's a road. Here's our road. And let's say we do want to do the 1 to 3 or whatever. Well, what you can't do is you can't do this back here and say, okay, this is my 2 acres that I'm building on. Unless you have some type of easement or access going back to this public road. Mm-hmm. You can't landlock a piece of property. A bank's not going to lend on that. Counties won't do it. Title company's not going to issue title commitment on that. So if you're going to do it that way, definitely get with the county first, because there are counties out there that are no longer allowing what they call flag lots, which would be this. Why might it be called a flag lot? Well, because it looks like a flag. So a lot of counties are not allowing folks to do this anymore. They want the acreage to be on something more. So, take the 2 acres out of here, or maybe take it out of here, or something like that. But depends on the county. It very much. They get the final say. So if you do want to do it back here, they may allow you to have an easement or part of the survey or something like that. But definitely ask them first. But it's not uncommon. But definitely find out from the county before you do anything.
Okay, that makes sense. Ben is asking a question. I'm going to actually pull up our website to show everybody what he means.
Show off.
What the price range means.
This is our potentially award-winning website, by the way.
So the question is, we're showing on all of our homes that they have more than one exterior option. We show a range of prices. And what it is just the cost difference between the exteriors. So some of the exteriors, like someone asked before, they're going to be brick, they could be hardy plank, they could have stone on them, they could be combinations. So the range that you're looking at here is the base price for the home, so the starting price on that home, and the lowest cost elevation to the highest cost elevation. And the other reason I'm pulling this up is because Melody was asking us about the cost of the Breckenridge in Palo Pinto County.
I had it. It was like $536 if you did it with the bonus room. But yeah, she can show you how to price it.
Yeah, so when I'm on the site, this is the price range for the Palo Pinto. This is going to be without that upstairs bonus space. So the price that Eric just gave has that bonus space included. And so it's showing here, that I am looking at Palo Pinto. And if I were in the wrong county, I can click here to change it.
Cool. What other questions? This is going great. Y'all keep asking the questions. We're getting close to being wrapped up. We've been at this about 1 hour and 20, which is what I call just getting warmed up.
We're getting thank yous.
All right. Going to sign with Ross.
Patrick's going to sign with Ross and Bryan College Station. That's awesome.
Yeah.
Joseph is saying he has a very recent survey of his 50 acres. Does he need something more to build?
No, you do not. That's perfectly fine. Bring it on.
Monica's saying her survey is less than 6 months old. How old will the survey be in order to be valid? You're
good. The age of the survey is not a big deal. Well, it can be. I mean, if it's like ancient, it's going to be an issue. But it's really if we can still find the corner pins. So, growth at where the corner pins are located, that's really the issue. And that's really only if it's a super tight lot. If you got 50 acres like the Joseph was saying before, that we're not too concerned. If we can pretty well ascertain where we think the corners are, we're pretty confident we can get on 50 acres. So Monica, it would just depend. But yeah, I mean, 6 months, you're going to be pretty good to go.
And she's also asking if we still need to get a survey to build on 1 acre.
Yes, no matter what. Yeah, you're going to need a survey no matter what. And yeah, Monica has all the corner pins. So.
Okay. Ashley is asking if we have to have 20% down. No, you have to have 10% down.
10%. 20% down for a construction loan, whether you build something, but yeah, definitely not with us. 10% is all you need with us.
All right. Monica says she has all her corner pins, so she's good. Angela is building a pool with her property. Is there a way to lump the pool expenses into the home loan?
Yeah, so it can be done. It needs to fit in that appraised value we were talking about earlier. So you have to have enough equity in the property where the price of the pool will fit in the appraisal. So the 10% still applies. And so you would have to have a significant amount of equity because the pools don't typically get the value that they cost, if that makes sense. And I say typically, I mean never. I'm very careful about using absolutes, but I'm pretty safe that pools, they just don't get the value for what they cost to put in. So as long as you've got the equity to cover, so you just do that same simple math, you know, if you've got a $300,000 house and the land's worth $100 and you're doing a $50,000 pool, you probably be okay. But it's going to eat into some of that equity of yours. It'll take a while to get that back. But yes, it can be done. I'm going to give that a 28% chance, Dawn. That's a calculated research shows 28%.
All right. Cleve is asking if he has 5% equity in the land for the house and have the rest in cash. Would we recommend that he keeps the cash or pay down the land?
I'd pay down the land, honestly, because typically land has a higher interest rate, Cleve. Now, I'm not a financial advisor and I'm not a CPA, but I do know that land interest rates are traditionally higher than home interest rates. So I would pay down kind of the Dave Ramsey school of pay down your higher interest rate things first. So yeah, I'd pay the land off or down.
Joseph is saying on his survey pins, he has the pins near the house, but some are way out in the woods.
I'll bet they are, Joseph. 50 acres is a big piece of property, so that's okay. We love walking through the woods looking at land.
Awesome. And Ashley is asking if 10% equity is enough to avoid PMI.
Traditionally, no, Ashley. Typically, you're going to need 20% to avoid private mortgage insurance. And that's going to depend on the program, but that's typically how that works. You would need 20% to avoid. Now, that's going to depend on the lender. That has nothing to do with the builder. That has everything to do with whatever lender that you choose. So great question.
Great. Angelica is asking if we knew the approximate cost to add a half bath to a plan.
I actually don't have that in front of me. I'd put it probably somewhere in the $3,000 to $5,000 range, depending on the plan.
Makes sense. Chris is asking, when will the Angelina be on your YouTube channel to view? So I have it tentatively scheduled for December. We do have a completed Angelina that we have full pictures on. So I'm trying to get that for you guys in the first or second week of December. Super excited about that. Clyde is asking if we receive an allowance for a driveway, will the check be made out to the contractor?
So Clyde, if you're under contract with us and you've got an allowance built into the contract for something like that for the driveway, it's typically we do a two-party check. So the check is made out to you and the contractor because we don't want one person to be able to do it without the other. So it's typically a two-party check is how that's done. So half yes.
All righty. And that looks like it is all of our questions.
Wonderful. All right. And Clyde, going back, it's not always, sometimes the check will only be made out to you, but it will never be made out to only the contractor. So it'll either be a two-party check or it'll be check made to you. And then you are responsible for paying that contractor. So best time to meet with a stakeout superintendent is typically right after we do the contract. That's scheduled a couple weeks after that. Dawn's going on one.
I am. I'm going to go on Wednesday.
She picked the beautiful time of year. So anyway, that's how that's done. It's typically done right after we, go to contract. I say that the property does need to be cleared. I mean, there's not a whole lot a stakeout superintendent can tell you if the property is just thicket. I mean, if it's kind of underbrushed, that helps. But if it's just thick and not cleared at all in any way where you want the house to be, there's not really a whole lot we can tell you. So it does need to be cleared, and we can help you finding contractors to do that. So.
Okay.
We tried to sign off, and that didn't happen. They're not having it.
It didn't happen.
They're not having it.
Being asked about pictures of the Livingston, I do not think we have any, but I know we have a few under construction, so we're working on it. City of Houston, we do not build in the city of Houston.
Right not, Arthur.
The city limits.
Right not.
So you could have a Houston address and we might build, but if you are paying taxes to the city of Houston, we will not build on your property.
Awesome.
Joseph is asking if we are hiring. Yes, we are.
Yeah. Go to the website, go to the career about us or about, and then careers, and all the positions we're hiring for are on there.
Absolutely.
We're not hiring for directors of marketing. We have the best one on the planet.
That spot is taken, and we
forget
need no SVP of business development either. Those spots are full. But we're hiring just about everything else.
All right. Very cool. Well, hey, thank y'all so much for doing this.
You're amazing for watching.
Yeah, y'all are great for watching. We appreciate it so much. We hope you learned something out of this. It'll be posted, of course, to YouTube and to Facebook, but certainly to YouTube indefinitely.
Yes.
Thank you so much for doing all this, and we hope to soon make you part of the Tilson family. Dawn, thanks for doing this.
Thanks, everybody. And yes, Joseph, we are hiring construction superintendents. So head on over to our website. All right. Bye, everybody.